Understanding the Garn-Saint Germain Act, how it protects a mortgage, your mortgage, when you lose a loved one. Hello, my name is Kevin Retcher, owner of First Meridian Mortgage. Today, I want to address a question I received recently from one of my clients who lost their partner and was concerned about whether or not they needed to refinance their home to remove the deceased partner from the title. They, of course, are sitting on a 2.5% mortgage, and they don't want to lose that. And so, what the Garn-Saint Germain Act does of 1982 is a federal law that provides crucial protections for homeowners during some of life's most challenging moments. At its core, the Act restricts lenders from enforcing what's called a due on sale clause in certain situations, particularly when transfers occur due to a death, divorce, or family transfers. Understanding the due on sale clause is important. Most mortgages contain a due on sale clause, which normally allows a lender to demand immediate payment of an entire mortgage balance based upon when ownership was transferred without notice. Without the protections of the Garn-Saint Germain Act, this could create a devastating financial hardship for families already dealing with a loss if this act was not put in place. The key protections are when a spouse or partner dies. Here's the thing. The good news is for my client that called and was in a similar situation, the act protects you when a spouse or family member passes away. Under Section 341D of the Act, lenders cannot enforce the due on sale clause in these specific situations. These situations are transfer by death to a relative when the property is inherited by a relative following the borrower's death. Transfer to a surviving spouse when a spouse inherits the property. Transfer by device or descent when property passes through a will or intestate succession. Transfer to a spouse or child when the deceased borrower's spouse or child become the owners of the property. What does this mean for you? You don't need to refinance to remove a deceased partner from the title. The surviving spouse can continue to make the existing mortgage payments without a refinance. They can maintain the original loan terms and interest rate. This especially is valuable in today's higher interest rate environment. They can assume the mortgage without credit approval from the lender and keep the favorable terms even if they don't qualify for the same loan today, especially at higher rates. This protection offers tremendous advantages in our current environment. Especially with interest rates being higher, a 3% mortgage can keep someone in a home. A 7% mortgage, if they had to refinance, they might not be able to afford to keep the home. They don't need to qualify. You don't need to meet current lending standards or go through credit approval. No refinance costs, so it avoids thousands of dollars in costs. It allows for payment continuity on the inherited mortgage. It doesn't impact your credit score because it's not in your name. Here's the thing. You do want to make the payments because they can still foreclose as soon as you don't make those payments, okay? The Garn-Saint Act applies to residential properties with less than 5 dwelling units, so single-family, condos, townhomes, small 2 to 4 unit properties. What you do need to know is the law protects you. There are some practical steps you should potentially take. 1, always consult an attorney. I'm not an attorney. This isn't legal advice. This is information that I've researched that I deem to be true, but do your own research. 1, notify the mortgage company of the death and provide documentation. 2, establish who will be responsible for the ongoing mortgage payments. Provide proof of inheritance, such as the will or court documentation. Maintain communication with the lender to avoid any misunderstandings. Why this matters, especially with veterans and military families, as a Marine veteran myself, VA loan specialist that I am, I want to emphasize that these protections are especially important for our military families. Many of our veterans secure low VA rates that would be impossible to replicate today. The Garn-Saint Germain Act ensures surviving spouses can maintain these valuable benefits. Bottom line is the Garn-Saint Germain Act provides essential protections during one of life's most difficult moments. It also allows for assumability on Freddie and Fannie in the event of a divorce, that one of the borrowers can assume the property if both borrowers are on. In that situation, usually they do want to make sure that you qualify if they're removing a borrower. Also, typically, unfortunately, for a lot of people, they don't have the money to potentially do the buyout. You can't increase the mortgage and remove someone from title using this act. So you would fundamentally have to have enough cash for your buyout in the divorce for your wife or your husband, and then get the bank to allow the assumption based upon your qualifications. But they can't call the loan due and payable because you're essentially getting a divorce. But if you change title in any way, then that would be potentially a different situation. But essentially, both of you would remain on the loan accordingly, okay? But seek legal advice when it comes to divorces for sure. If you're facing this situation and have questions, find an attorney. You can Google and research the Garn-Saint Germain Act of 1982. This act may be exactly what you need, especially with our aging population of baby boomers. Many of them may still have a mortgage, may have a low rate mortgage, and heirs may be taking those mortgages over. You do want to do your research on whether or not you need to owner occupy the property to continue. So seek that legal advice accordingly, but keep in mind, in most instances, as long as you keep making the payments, typically you're not going to have a problem. My name is Kevin Retcher, owner of First Meridian Mortgage. If you found any of this information useful, like, share, and subscribe. Again, if you can subscribe to my channel and or give me a comment, I'd appreciate it. My name is Kevin Retcher. I'm the owner of First Meridian Mortgage. I've been in business for 29 years. I'm a veteran-owned business, doing business in Virginia, Maryland, D.C. If you are in another state, I have over 34 other broker owners like myself that I can recommend you to. I'm happy to help. You can call me whether or not you're in Virginia, Maryland, or D.C. It doesn't matter to me. I'm here to help. My name is Kevin Retcher, owner of First Meridian Mortgage. I'm the best kept secret in the DMV. Talk to you soon.